What if I told you a single decision triggered a global financial meltdown that nobody saw coming until it was too late? April 2nd, 2025 will be remembered as Liberation Day, but not for the reasons the world expected. Markets didn't just stumble, they collapsed. Billions were wiped off in hours, and the aftershocks are still being felt. Today, we unpack what really happened, why it happened, and where we go from here. The spark tariffs that shook the world. On April 2nd, President Trump shocked the markets by slapping a 10% tariff on all imports, no exceptions. It was a bold move branded as an effort to restore American dominance in trade. But global markets didn't react kindly. China instantly retaliated with 34% tariffs of its own. The situation escalated into a high-stakes game of economic chicken. By the end of that week, the S&P 500 nosedived by over 10%, and the Dow dropped by more than 3,000 points in 48 hours. Chain reaction, global markets in free fall. The US wasn't the only one to feel the heat. This crash went viral. Japan's Nikkei dropped nearly 7%, and trading had to be halted as panic spread. European markets followed, plunging into deep red. France, Germany, and the UK all saw some of their worst trading days in years. Fear ruled the day as volatility indexes surged to levels not seen since the 2020 pandemic crash. Deeper issues, a crash waiting to happen. But here's the thing, this crash wasn't just about tariffs, it was the match that lit a pile of dry timber. For months leading up to the crash, inflation had been creeping up. The Fed was split on interest rates, and tech layoffs were increasing. Corporate earnings were already under pressure, and a shaky bond market hinted that something wasn't right beneath the surface. When the tariffs hit, it just accelerated a downturn that was already baked into the system. Investor panic, billions gone in days. The ripple effect hit investors the hardest. Trillions of dollars were erased from the market. Retirement portfolios, pensions, and institutional funds all took massive hits. Some hedge funds closed overnight, unable to absorb the liquidity crunch. It wasn't just a market correction, it was a full-scale panic. Corporate fallout, layoffs, and hiring freezes. As companies saw their valuations plunge, they went into survival mode. Mass layoffs began across multiple sectors: tech, retail, finance. Startups that were flying high just months ago found themselves slashing budgets and canceling expansions. Even big corporations hit the brakes on hiring and began restructuring to ride out the storm. Consumer confidence crumbles. Beyond Wall Street, Main Street started to feel the sting. Consumer confidence fell to its lowest in 5 years as everyday people watched their savings shrink. Big-ticket purchases like homes and cars were delayed or canceled. The economy was no longer growing, it was retracting. Is this a recession? Economists are divided. Are we entering a new recession or just a painful correction? Some indicators like GDP contraction and rising unemployment suggest we may already be in one. Others argue that strong fundamentals like manufacturing output and wage growth might prevent a full-blown recession. But let's be clear, confidence is broken, and that's hard to repair quickly. What happens next? So, what does the future hold? Is recovery around the corner, or will things get worse before they get better? There's cautious optimism as talks of trade negotiations restart. The Fed is considering rate cuts to stimulate the economy, and stimulus measures may be introduced to boost consumer spending. But the markets are fragile, and one wrong move could spark another wave of panic. The 2025 crash reminds us of one brutal truth: the financial world can change overnight. What looks stable today might be gone tomorrow. Understanding the causes and implications is the first step to surviving and thriving in a world this unpredictable. Thanks for watching. If you found this video informative, hit the like button, subscribe, and turn on the notification bell so you never miss an update. Stay sharp, stay informed, and remember, in the world of finance, knowledge is your best defense.